The next presenter I want to introduce to you is Andrew Keene. Andrew Keene was an independent equity options trading expert on the Chicago Board Options Exchange for 11 years. During this time, he was a market maker in over 125 stocks, including Apple, General Electric, Goldman Sachs, and Yahoo. Now, from 2006 to 2009, Andrew was the biggest independent on-the-floor Apple trader in the world. Currently, Andrew is actively trading futures, equity options, currency pairs, and commodities. Andrew has become one of the CBOE's most recognized faces in media and financial community, making regular appearances on Bloomberg TV, BNN, CNBC, Fox Business, Sky Australia, and CBOE TV. He is also a regular contributor for Bloomberg Radio, dailyforex.com, Trader Planet, minionville.com, and Jim Cramer's TheStreet.com. Andrew's first book, Keene on the Market, Trade to Win Using Unusual Options Activity, Volatility, and Earnings, published by John Wiley & Sons, is available now. Andrew received his BS in Finance with a concentration in accountancy from the University of Illinois. Well, ladies and gentlemen, I am pleased to introduce Andrew Keene.
How's everybody doing today? I hope you guys are having a great day so far today. I actually had a flight out to San Diego, and then I canceled it because I forgot I was supposed to present at MTI's webinar, and I couldn't miss that. So I'm flying out right after to San Diego in about 2 hours. So glad I could be here today. I want to thank MTI for having me, and I'm here to teach you the secrets of a market maker. My name is Andrew Keene. I'm sure most of you have seen my webinars before. I see some people in the room that are current subscribers. I was a trader on the floor of the Chicago Board of Options Exchange for over a decade. From 2002 to about 2011, 2012-ish, I was a market maker. I started in the General Electric pit. Then after that, I went over to the Philip Morris pit, otherwise known as Altria, before they spun off Philip Morris International, Philip Morris Domestic, Kraft, and now they have Mondelez. Basically, I started from the University of Illinois, no idea what I wanted to do. I had a finance degree, accounting minor, concentration they could decide because you couldn't have a minor, and I just had no idea what I wanted to do. My dad told me, I think you should trade. I'm like, trade? Are you kidding me? I see those guys in Chicago. I'm a Chicago guy, okay? Yellow jackets, walking around all the time. I'm like, they eat so fast. All of them are on drugs. They are drinking all the time. I'm like, that's not like me. I don't know if I really want to do this. He's like, I really think you'd enjoy it. It's something different every single day. So I started in 2001, and actually I got pushed back by my trading firm. I started with a trading firm known as BOTA Capital Management, B-O-T-T-A. It stood for Best Option Traders There Are. Talking about a bunch of people that are confident. These guys were confident. There was 100 traders in there when I first walked in, 6 partners, everybody trading on their own account, everybody having a different percentage deal. Usually when you start as a typical trader, after the clerkship program, you get a discretionary bonus, then you get a 50-50 deal. Usually the best deals on the floor are an 80-20 deal where you don't have to put up any capital, and then you make 80% of the profits. Your backer would get 20% of the profits. Every single year I made money, more money than the year before, okay? Starting in 2002. Trading is one of those things, from my point of view, you either get it or you don't, okay? Everybody in this world is going to have different risk tolerance, going to have different risk versus reward setups. I'm a very, very active trader. I trade a lot. I will show my P&L to my subscribers at any point in time. Here's my account right now. I trade personally through Interactive Brokers Portfolio Margin just because they are the cheapest out there, period. So we see here that here's my account. This is how much money's in my account. I have $455,000 in my account. This is 100% my own money. This is not a simulated account. And I'm up. I started this year with $220,000. So I've doubled my account this year, and this is every single position I have in. So as you can see here, I'm active trader. I trade a lot, and this is my portfolio book, and this is after commissions. I probably spent about $75,000 in commissions this year. I personally use Interactive Brokers because they're the cheapest, but feel obligated to use whoever you want. These are all my positions. If you go to my trade log, I can bring my trade log up from any day. Let's bring up Tuesday. On Tuesday, I traded 1,000 shares of stock. I traded 450, 650, 650, 800, 1,300, 1,500, 1,700, about 2,300 options. I traded about 2,300 equity options on Tuesday. Wednesday, traded a little bit less, 600, 1,000, maybe 1,200 options on Wednesday. So as you can see, I'm a very, very active trader. I like to trade a lot. I like to have a lot of positions on. Basically, what happened was I lost $484,000 in a company named AMAG, A-M-A-G. They're a biotech company. I went to Asia, took some time off, recuperate. I said to myself, I know I can make money trading. I have confidence. I've made money before. You know, I got unlucky in this company called AMAG. I put on a position, and I thought I was so good of a trader. I went against the hedge fund, and I just kept adding my loser, adding my loser, adding my loser. When you guys make mistakes in life, you have to learn from it. Everything in life is either a lesson or a blessing, right? And this was a blessing that I lost that $484,000. I came back at $50,000 to my name, and I said, I know I can make money trading. If I cannot make money trading, then I will have to get a financial analyst job, income statements, balance sheets, general ledgers. But I know I can make money trading. Took that $50,000, and I've made over $5.5 million in my career now. So I was a market maker on the floor, Chicago Board of Options Exchange, for over 10 years. After my trading firm went insolvent, I then got backed by two people. One person, his name is Ed Tilley. He is now the CEO of the CBOE. Okay? So if that's not confidence, I don't know what is. The CEO of the Chicago Board of Options Exchange personally backed me with his own money. He only backed one other person. There's two of us total. Okay? So he backed me for a while. He got a higher position at the CBO where he wasn't allowed to back me and my other colleague. And then, you know, I had another backer. When I was backed, I got an 80-20 deal. I have taught thousands of students to full-time traders. There are a lot of really good educators in the space. Unfortunately, there's some educators that aren't so good. When I always say, you guys are looking for an educator, you're looking for someone to shadow, you're looking for someone to look up after, you're looking for advice, I say 3 questions. And 3 questions are simple and easy, okay? I'm kind of skeptical at heart. I don't believe in a lot of, people. I've actually acquired this over years because, I've had some bad business deals go through. Anyways, 3 questions I would personally ask anytime I go to the webinar. I would be that guy in the back of the room. I would raise my hand. Number 1, do you trade with real money? Okay, it's a yes or no question. There's no way around it. Of course, everybody's going to say they trade with real money. They're going to say, yeah, I trade with real money. Number 2, do you have proven P&L statements? Can I see your P&L? Can you show me that you actually make money? Let me ask you guys a perfect question, okay? I always use golfing as an example, and I personally hate golf. But if you want to learn how to play golf, okay, would you rather learn how to play golf from someone who's read 100 books on golf that shoots 100, or would you rather be taught how to play golf from Tiger Woods? Okay, Tiger Woods on the course, telling you which club to use, wind trajectory, what's the best balls. I don't know what else there would be, but I would want to be taught by the best. Okay, I consistently have become a profitable trader. Every single day, I tell my subscribers, I go, here, guys, here's my P&L. Okay, you guys can see whatever you want. This account, I have one trading account. That's it. Okay, this account started with $220,000 in it. This year, January 1st, I got as high as $540,000. Okay, so yes, I have got up to $540,000. Now it's back down. I'm down about $85,000 from the tops, and I have $455,000. So I have doubled my account. Not only have I doubled my account, I have another trader that I back with my own money. Okay, using my trading style, my philosophy, he has doubled his account. He's off a little from the highs too. His account started with $27,000. Okay, I'm a cowboy. I'm a gunslinger. I trade a lot. I'm pretty active. He trades a very similar methodology, but he trades on a much, much smaller account. So James, who's my other trader that works for me, that I personally back, he started with $27,000. He got it up to $60,000. Now it's about $53,000 or $54,000. So he's doubled his account since November, and this is all after commissions. Okay, I'm sure you guys have seen me on TV before: CNBC, Bloomberg, Fox Business, Sky Australia, BNN Canada, WCIU, CBOE TV. I like to go on TV. Helps feed my ego. I don't like to do it because I'm away from my computer. Okay, I trade every single second of every day. So get back to the thing. If you're looking for a mentor, number 2, are you profitable? Can I see P&L statements? Okay, if someone can't show you proven P&L statements, I don't know why you'd want to learn from them. Simple and easy. You want to be learning from someone who's actually a profitable trader, or someone that's just telling you how to trade. Similar to, would you want to learn how to golf from someone who's read 100 golfing books, or do you want to learn how to golf from Tiger Woods? It's simple and easy. Do I want to learn how to shoot a free throw from Shaquille O'Neal, who shoots 50%, or from Ray Allen, who shoots 90%? Simple and easy, okay? So let's get on to the presentation here. You can trade with $5,000, of course. This is the best time in history for a retail trader. I was on the floor as a market maker. I'm not on the floor as a market maker. I'm upstairs as a market taker. This is the best time in history to trade as a retail trader. I watch a lot of old school DVDs, read a lot of books on options, okay? McMillan's in my opinion, one of the greatest options educators in history. A little dry, but he's amazing, okay? Back when he used to do DVDs, he used to say the market on the option is $7 bid at $7.70. If I pay $7.70, I need the stock to move up $2 just to break even. Okay, this doesn't happen anymore. The markets are very, very tight. They are penny wide. When I was a market maker in the Apple pit, my market on the screen would be $1 to $1.20. Trade with me, okay? Now, as you guys watch and you realize 107, 109, 21 up on the Phillips, okay? And also, the markets are more liquid than ever. This is the best time ever to trade as a retail trader. Period, bar none, hands down, okay? If you cannot make money as a retail trader now, then maybe it's not for you. Trading is not for everybody, okay? And the one number I want to institute to you guys that you want you to remember throughout this whole presentation is the number 90, okay? Always think of 90. 90% of all traders lose money. That is a fact, okay? And if you think about it, how can that actually be a fact? If one person buys a call, one person sells a call, doesn't someone have to make money and someone lose money? Okay? Trading in general, you guys have all taken time out of your day. Saturday, you could be with the family, you could be at the bar watching basketball, you could be doing a lot of other things, running errands, at the gym. You guys have all taken time out of your day to watch some people present. Okay? We have 4 great presenters today, and think about it. Talk about, listen to the recordings, watch the slides, take some pictures of your screen, okay? The goal for me, just like the goal of every other every other educator that came in here to present, is to get you guys away from that 90%, okay? 90% of people lose money. That's terrible. That's embarrassing, okay? My goal as an educator is to help people transition that to at least 50-50. I mean, I always say I want all my subscribers to make money, but I can't control feelings, emotions. I always tell my traders I can't click the mouse for them. So this is the best time in history to trade, period, bar none. Why is it the best time in history? There are 8,700 publicly traded stocks. There are 4,200 stocks with options, okay? I am an equity options trader. I would say that's my bread and butter. I've been doing it for 11 years. I know options backward, forwards, forward, back. I'm an active trader. I'll take 4 to 6 new positions every day, maybe 10 to 12 exits every day. I hold positions overnight. I'm comfortable with that. Of those 4,200 stocks with options, there are 300 stocks with listed weekly options, okay? What does that mean? More products means more opportunity. More products mean more opportunity. More products mean more opportunity, okay? So if there's more products, more opportunity. When I was in the trading pit, there was only 125 stocks that I could trade. That's it, 125 stocks. Now that I've moved upstairs, I can trade 8,700 stocks, and I can trade 4,200 stocks with options. So when I was in the Apple pit, and I was the largest trader in the Apple pit, I could only trade 125 stocks, okay? I could only trade 125 stocks. But now that I'm upstairs, I can trade 4,200. Whatever kind of option trader you are, this is great for you because there's more products. If you're a credit trader, okay, you like to sell credit bull spreads, credit bear spreads. You like to do covered call strategies. You like to buy outrights, okay? Whatever you individually like to do, I always say as a trader, volatility creates opportunity. The more listed classes there are, the better it is for a trader, okay? Some days I can go an hour, 2 hours without making a trade. My goal is to put on the best possible trades. As you guys can tell, how I've doubled my account this year, okay? In a pretty volatile market, okay? I don't know anybody that can show you the size of account that I show you. Okay, I traded one trading account and show you that their account has doubled in value over the course of 3 months. Okay, I've taken it from 220,000 to over 450,000. So let's talk about what a market maker is, okay? I'm going to talk about what a market maker is, how the market makes money, and then at my workshop, I'm going to teach you guys how to take advantage of this, okay? Let's start taking money from the market maker. And there's a lot of great presentations out there. You know, if you think about what kind of presentations there are, okay? I just did one. My last topic was the Ichimoku Cloud, okay? There's probably 4 to 6 people that do topics on the Ichimoku Cloud, okay? Everybody's is a little bit different, but the same presence of the Ichimoku Cloud is the same. People can give, you know, webinars on, you know, mastering the gap, okay? Gap's a popular topic nowadays, or day trading stocks and stuff like that, okay? However, there's no one in the industry that can give you a presentation on being a market maker, okay? I've been in Chicago. I've always said for 12 years, I'm in Chicago because my career is here. My job is here. I'm a trader on the floor of the Chicago Board Options Exchange. It is voted the #1 place in the world to trade every single year, #1 place in the world to trade. When I left the floor, I moved upstairs. I don't have to be in Chicago anymore, okay? But these secrets that I'm going to share with you guys today is what I learned from being on the trading floor. Okay? Show me another presenter that actually was on the floor trading at all. Okay? I was a market maker. That's like the highest of the high. So let's talk about what a market maker is. A market maker is someone who is willing to quote a bid-ask spread for a given option. The market maker is willing to take either side of the trade, is hoping to profit from the spread in between. A market maker can make money in 3 different ways. Number 1, they can make money on the bid-ask spread. Number 2, they can make money on implied volatility. We're going to talk about all these. And number 3, they can make money on time decay. Okay, we're going to talk about this. So let's say Apple's trading $530. A market maker makes a market on the December 550 calls. He says, I'm 25 at 25.30, 20 up. This means at every given point in time, the market maker is willing to pay $25 for 20 of these options and willing to sell 20 of them at 25.30. Okay? If you think about it, why would a market maker do this? There's not many places in the world that's a market maker. Okay? I like to stop at Nordstrom. I go in there, there's a pair of jeans that are $250. I can't say to them, hey, I got a pair of jeans I'll sell you. I want $200 for these, okay? Most retail places are just sellers, right? There's very few places where you can actually go in there and sell something to them, okay? One example, perfect example, I just took a picture of it the other day, a currency exchange, okay? If you think about the way the market maker is, you want to think about how they make money, because if we want to start taking money from them, we have to learn how they think and they operate, okay? A currency exchange is the exact same thing. How does a currency exchange make money? Currency exchange makes money. They're in the airport. Okay, you're going to Paris, France. You go to Paris, France. You're going to the airport. You're like, man, I need some euros when I get to France. I say, hey, I have $100. How many euros will you give me for this $100? Currency exchange goes, I'll give you 130 euros. Perfect. Let's make a trade. So you trade your currencies from U.S. dollars to euros. Then someone is in France. They fly back to the United States. They have 150 euros. They say, hey, I got 150 euros. I'm going to Chicago to hang out with my buddy Andrew. How many U.S. dollars can I get? Put in their equation. They say $100. So what you see here in these 2 transactions, the currency exchange just makes the bid-offer spread. Okay? They make their bid and they make the offer. The goal of a market maker, #1 goal of a market maker, in theory, is to have 2 different traders come in. Trader A, Trader B. Trader A comes in and says, hey, how are the D's 550 calls? And he goes, hey, I'll sell you them for $25. Trader B walks in 2 minutes later, says, hey, how are the D's 55 calls? I'll pay $25.30. Boom, it's a transaction. You buy the bid, you sell the offer. Think of it as anything you want with profit margin, okay? You're buying a good and you're selling it right back, okay? If a trader bought 20 options for $25, they sold those for $25.30, the trader would make 30 cents times 20 times 100, because every option is 100 shares of stock. So if I made this trade, I would make $600. I would make $600 on this trade, okay? Simple and easy. Let me tell you a little story. I was trading Microsoft and Yahoo, okay? Microsoft came out and put a bid in for Yahoo for $35. My backer called me up 5:30 in the morning. Hey, yeah, Microsoft just put in a bid for Yahoo. It's trading $35. I first go, what time is it? He goes, 5:30. I was like, oh, no. I go, how does my position look? Because I have positions and then I have day trades, right? He goes, you're going to lose about $48,000. I said to myself, I have two choices right now. I can go into the pit and try to trade as well as I can possibly trade. Or I can just buckle up, say I lost $48,000 and not come in for the day. I came in that day, I made $52,000 day trading Yahoo, like a machine. I mean, it was just like this. I bought the bid, sold the offer. Next trade, bought the bid, sold the offer. Next trade, bought the bid, sold the offer. $52,000. My position lost $48,000. I ended up with a $4,000 profit. And that was one of the best days of a day trade where I could just buy the bid and sell the offer ever and ever again. So, why is a market maker both a buyer and seller? Okay, if you think about like the way a casino works, right? A casino is just going to make money on the longevity of someone playing, right? Which is kind of the same thing as a market maker. Okay, so the Vegas always has edge, right? In any game they offer, they have edge. If you play blackjack, let's say you go to Vegas with $1,000 of blackjack, could you win money? Yeah, you can win $1,000, $2,000, $3,000, $5,000. Okay, but the fact of the matter in blackjack, unless you know how to count cards thoroughly, you're always going to lose money in the long run. Okay, and the market maker is kind of the same way. They make a bid and an offer. You go to any currency exchange, and there's a bid and there's an offer. There's somewhere they would want to buy the bid and sell the offer. In 2006 to 2009, when I was the largest independent Apple trader in the world, we had 18 traders in our pit. I wish there was only 2 traders in our pit, okay? Because the traders in my pit were competition against each other. If I owned a currency exchange, let's say I was at the airport, would I want a lot of currency exchanges at the airport competing against me, or do I want little? I would want little currency exchanges competing against me, okay? So what we know now is the markets are very, very tight, liquid. That means it's a great opportunity for a retail trader, okay? This is the best time for you guys ever to trade, okay? I always say, start maybe on a simulated account. That's no shame in starting a simulated account, okay? Start on a simulated account. If that works well, then you can start going a little bit more, a little bit more, a little bit more. I day trade Facebook and Twitter almost every single day. I had a philosophy on how to trade it. I trade it every day. I started with 1,000 shares of stock with like a 70-cent stop. So I was risking $700. The philosophy and the theory behind it works. So I've upped my level from 1,000 to 3,000 shares. Okay, so now I trade 3,000 shares of Facebook and Twitter as a day trade. So I'm always willing to risk more if I can see it consistently makes money. Okay, so just remember that the market makes money on the bid-offer spread. Oops, I missed one. Another way that a market maker can make money, okay, is on, we call it inventory, okay, and this is, kind of like an applied volatility thing. Okay, what is implied volatility? There's 2 kinds of volatilities out there. There's historical volatility, which shows volatility in the past. There's implied volatility, which shows potential implied volatility in the future. And I compare it to a basketball jersey store, okay? Every single year, the basketball jersey store will order a ton of jerseys, right? They'll buy jerseys for LeBron, Derrick Rose. They'll buy jerseys for Dwight Howard, Jeremy Lin. And they know that, LeBron jerseys are always going to sell, even if he gets injured, right? Derrick Rose just got injured. His jersey still sells fine. They're always going to make money on those, okay? So when I'm trading, I have all these stocks, right? I'm trading all these different stocks. I can't possibly think that I'm going to make money on every single position. But I know that I'm going to make money overall, just like the jersey store, okay? They might not make money on every single jersey. They can't just have all LeBrons and all, Derrick Rose jerseys at their store. They need to have other players. So let's say Dwight Howard. Dwight Howard gets signed as a free agent for the Rockets. He was on the Lakers before. He moves from LA to Houston. Well, now I have all these Dwight Howard Laker jerseys. What am I going to do with them? No one wants him. He's not on the team anymore, right? I have to sell those for a discount. Okay. So when I am trading, I'm always tweaking my positions. There's no problem. And one of the hardest things that people don't ever do is taking off a loser. In general, I am a male, obviously, okay? Men in general don't like to take off positions. Not saying that women don't as well, but men have difficulty admitting they're wrong, right? You guys are out there probably saying, yeah, I never want to admit I'm wrong. I know personally I never admit I'm wrong, okay? I always think I'm right, okay? But in trading, sometimes you have to say, hey, you know what? I'm wrong. I have to sell these Dwight Howard jerseys at a discount to liquidate some cash, to get some capital. Right now, about 60% of my account is in cash, okay? It was as low as 10% of my account was in cash. Market's a little bit more volatile right now. I want to move more into cash. So as a trader, you always have to be, moving your money around, moving your positions around. There's nothing wrong with saying, hey, I'm losing money. I don't like these positions. If I showed you my account got as high as $540,000. I have been scaling back on my positions, okay? I haven't been making money in the last 2 weeks. You want honesty? I'm down $85,000 from my highs, okay? I have not been making money. So what did I do? I told all my subscribers, I'm just going to cut it back a little bit, okay? I was trading amazing. I was making like $10,000, $20,000, $30,000 a day. Boom, to the top. Then started giving a little bit back, and then a little bit more back, and a little bit more back. Say to myself, hey, Andrew, you're having a great year. You've doubled your account. Let's just start from scratch again. Instead of trading 300 lot in options, let's start with 30 lots, okay? When we start building the account more and more, then we can go to higher numbers, okay? And this is just like the Jersey store, guys. Not every trade is going to work. And if you always focus on the trades that are losing money, you're never, ever going to be, making money. I can't tell you how many times I personally, or traders I know, literally would just stare on their screen, and they'll be like, come on, go up, come on, go up, come on. That's not trading, guys, okay? That's how people lose money. You want to be part of the 90%, or do you want to listen to me and take that to the other side, okay? My goal is to every single person here to not be part of that 90% of the people that lose money, okay? So just remember, just like the basketball store, sometimes we have to sell stuff for a discount in order to make money in the long run. So let's visit our example here in Apple. The market on the 550 calls are 25 bid at 25.30. The theory is the market maker buys them at 25, sells them at 25.30. They lock in $600 profits within seconds, okay? This is just like profit margin. Buy something and sell it a little bit more expensive. The market maker can make money in 3 different ways, okay? So we need to know how the market maker makes money, and then we're going to talk about it in the workshop, how to take money from the market maker, okay? If you guys trade options out there, the workshop is probably the best workshop I've done. I did a workshop for unusual option activity in Ichimoku Cloud and earnings. When I was writing this course, I'm like, this course is awesome, okay? It's going to save traders hundreds, if not thousands of dollars. So number 1, market maker profits from the changes of implied volatility. As a market maker, I never once look at charts of stocks, okay? You want honesty? I'll give you honesty. When I was on the floor trading, I never once looked at the chart. Never. Ever. Economic data, I didn't care. I stared at implied volatility. That's it, okay? I want to buy it, sell it, buy it, sell it, okay? Just like a currency exchange. Currency exchange doesn't care if you can't get oil through Ukraine. All they care is if they can buy it at a cheaper price and sell it at a more expensive price, okay? None of that matters. Do you think fundamentals matter? They don't. Supply-demand curve matters, okay? So as a market maker, I stared at implied volatility all the time, knowing if I can make money in the implied volatility, if I can buy something cheaper, sell it over and over again, I'm just going to be printing money. So if I'm a market maker and I sold 20 of the Facebook April 70 calls for $3, if these calls have a 50 delta, okay, then I would hedge my position, okay? So in theory, I want to buy the bid, sell the offer. It's not going to be that easy. You don't just sit down there and there's traders selling you the bid, buying the offer. Otherwise, everybody in the world would be down there, right? However, as a market maker, I'm trying to make money on implied volatility, okay? So if I sell 20 Facebook calls for $4, I will then go hedge my position with stock. Okay, we want to become quote-unquote delta neutral. So if I sell 20 of these calls for $3, they have a 50 delta. I go buy 1,000 shares of stock. 1 week goes by, and Facebook has not moved. Implied volatility has dropped, and I've also made money on time decay. 3 examples of how a market maker makes money. Bid-ask spread. Compare that to a currency exchange. Okay. Number 2, implied the volatility. Compare that to the Jersey store we just talked about. And the third way they make money, think of it as an insurance company. Okay. If a market maker is selling options to the buyer of the options, in theory, they make money every single day that goes by from time decay. And how is that possible? Let me show you a perfect example you guys can all relate to. You guys, everybody here probably has insurance on the car. I know the state of Illinois requires insurance on your car. Let's say you pay $100 for insurance on your car for 1 month. You think you pay it monthly, but in theory, you're paying it daily. right? So if you buy $100 worth of insurance for 33 days, you're actually paying $3 a day, right? So every single day that goes by that you do not get in a car accident, the insurance company is making money. That is very similar to time decay for a market maker. Okay? If I'm a seller of options, I'm a seller of implied volatility, I'm also a collector of theta. Greatest thing about options is you could be the buyer or you could be the seller. You can pick and choose what you want to do. And you can get out of any position at any point in time. One click of the mouse, you can go from long to flat, flat to long, long to short. So a market maker can make money on that time decay. Okay? Implied volatility, time decay, and bid-ask spread. That is how the market maker makes money from you. That's how 90% of all traders lose money. Okay? And this is why the market maker always wins in the long run. They always win in the long run. But we're going to take that and we're going to flip the script on them. So let's say 1 week has gone by and Facebook hasn't moved. Time decay. The trader is make money just like an insurance company. Okay? I know personally I haven't gotten in a car accident, knock on wood, in about 6 years. So how much money has the insurance company made on me? Do I think to myself, I'm in the 90% boat because all I do is pay the insurance company money and they don't ever pay me anything back? Okay? It's like going to Vegas. Okay? Vegas is always taking advantage of me. I always lose. I know personally I go to Vegas, and I was trying to explain this to my friend. I trade professionally for a living. Okay? I go to Vegas, it's entertainment value. If I go there with $5,000 cash, I'm done gambling when the $5,000 is up. It's entertainment. I don't expect to go to Vegas to win. Okay? From my point of view, it's entertainment. You guys cannot think of trading like that. Trading is not entertainment. I know so many people that are trying to make a career, a job out of trading. You have to take it seriously. You have to study. You have to go to workshops. You guys, like I said, you took time out of your day on a Saturday, okay, watching a workshop. That's amazing. You know, give yourself a pat on the back. That is the first step to becoming profitable. There are 4 stages of trading, okay, and a lot of times I like to give a lot of analogies or ways, you know, that aren't even on my presentation, okay, and I'm going to tell you the 4 ways of trading. Stage number 4, you lose a lot of money. Unfortunately, when most people trade, they lose a lot of money, okay? Right off the bat, people lose money. They don't know how to properly trade. They haven't educated themselves properly. They can't handle the risk tolerance of it. You know, if I have $1,000 of risk in Facebook, you know, I'll leave for a TV interview. I'll come back and I'll be like, hey, let's see if I have a stop loss in place. Let's see if I made money or lost money, okay? I don't have that risk tolerance, you know, that people have, you know. It's so weird to me because my average P&L swings on a daily basis, I would say, is $10,000, maybe $12,000 a day. Okay, so my individual P&L is about $10,000 to $12,000 a day. James, who's my trader that I back, his is $500 to $700 a day. But I can't think of it like that. I think about it differently because I've been doing it for so long. Okay, if I make $20,000 in a day, I don't go out on a shopping spree or get bottle service or buy a car. Okay, I'm just not like that. Okay, I'll still go to the grocery store, and if Gatorade's not $1, I don't buy it. Okay, so you guys got to realize that trading money is separate. I don't look at it as monopoly money. Okay, so there's 4 stages of a trader. The first stage of a trader is you lose a ton of money, and unfortunately, most people stop at that stage. They can't get past the next stage. Okay, number 3, market makers cannot see stop losses. No. And I'm going to teach you guys why market makers actually want you to make money. The whole goal is the market maker wants you to make money. So number 4, you lose a ton of money. Number 3, you lose a little bit of money. So you're like, oh man, I used to lose a ton. Now I lose a little bit. If I can just get it to the next stage, I can get it to the next stage. Okay. The next stage is you make a little bit of money. Okay. Oh yeah, man, I'm finally starting to make money. You know, it's not enough money where I can quit my job, but I'm starting to see the light at the end of the tunnel. And then the 4th stage of trading, or stage number 1, is you start making money hand over fist. And those are the 4 stages of trading, okay? Whatever stage you're personally at, okay? I would guess most people here are between 3 and 2. If people lost a ton of money, they're probably not at this webinar because they don't care about their education. They think they know everything. So if you guys are at 3 and 2, I want to get you to the next stage, okay? I'm always trying to get you to stage number 1, which is where I'm at, okay? As a subscriber, I'll show you any of my trades, any point in time. I'll show you my P&L. Last week was a rough week for me. I lost 4 to 5 days. Still doubled my account this year after all commissions. Okay, and like I said, I've probably spent $75,000 in commissions. So let's talk about this here as an insurance company. So when I got my start on the floor, I started as a training program, okay? Unfortunately, there's not those anymore. You know, I have so many buddies that are like, I want to trade. What's my first step? And when I started with the University of Illinois, when I graduated in 2001, you know, there was opportunity. Someone who's graduated from Illinois could go to a clerk to trade program. So when I was graduating, I had interviews with Wolverine, Susquehanna, and Boda Capital Management. They would ask you silly questions like, I had a question was, how many square miles are in California? Okay. How many square miles in California? And there's no right or wrong answer. They want to see how you're going to think on your feet, how quick you're going to think on your feet. These are all typical trader questions or interviews. When you go to a trader's interview, how many windows are in New York City? How many gas stations are in Georgia? Okay. There's no right or wrong answer. They want to see how you're going to think on your feet. Okay. When you get thrown for a weird question with a numerical value, how you think on that. You know, my favorite one they always ask me is, you got a box of socks. Okay. You have a box of socks. In the box of socks, there's 4 red socks, 11 green socks, and 17 black socks. So 4 red socks, 11 yellow socks or whatever, and 17 black socks. How many socks do I need to pick out of the box to guarantee myself a pair? So everything's just kind of game strategy and game theory behind it, okay? So this is what it took to be a trader. When I started, there were 14 people that wanted to learn how to trade as a market maker. There was a guy from Harvard, not Hartford, from Harvard. He never got the ability to trade. Trading, the best and worst thing about it is you don't need that high level of education. You don't need to go to Harvard. You don't need an MBA. You know, I started trading on the floor. I always said, hey, I'm going to go back to the University of Chicago. I'm going to get my MBA. Well, now I started trading. I don't need my MBA. So you don't need that high level of sophistication. You can have a high school diploma. Heck, you don't even need to graduate high school to make money trading. Okay, so that's like the best and worst thing about it. The higher levels of education doesn't get you to be better as a trader. So when I was a market maker and I was clerking, okay, we had class every single day. 12 o'clock, we had class every single day. We had tests once a week on our option knowledge. And we had mock trading every single day after the close. Let me rephrase that. We had mock trading every single day after the close that the traders did not want to gamble playing roulette, craps, blackjack. And I'm not kidding you, okay? There was 13 of us. I'd come in and be like, hey, John, can we do trading today? No, I think we're going to deal some blackjack. There was one guy that was quote-unquote house, and after the close, they were supposed to be training us how to mock trade, and they were playing blackjack, crap, and roulette. Okay? So 14 of us, only 3 of us got the opportunity to trade. Okay? 3 of us out of 14. So the opportunity to trade, 4 socks is the right answer. 4 stocks is the right answer. So 4 out of 14 of us, only 3 of us got to the opportunity to trade. Out of the 3 of us, only 2 of us are currently trading. It's me and my buddy. He actually started a hedge fund in Chicago. He just got $38 million of capital raises. Okay, my trading firm was hands down the best traders I've ever seen in my life. These guys were unbelievable. Okay, and I owe a lot of my success to them. They mentored me. They tutored me. They taught me. Okay, every single day. I was that guy that always asked questions. Like literally, they used to be like, "Do you ever shut up?" No, I don't shut up because I actually want to make money trading. I know sky's the limit when you're trading. I want to know everything out there about options, okay? I used to have my head trader yell at me all the time. Dude, stop asking me questions. I'm like, well, I want to know. I'm always looking for more knowledge because the more knowledge you have, the better you're going to become as a trader, okay? So 3 of us got to trade. So why is it the best time in history to become a retail trader? This is the best time in history to become a retail trader because the markets are tight. Anyone with the internet connection can make money, okay? I was on the floor as a market maker. I was paying close to $8,000 a month for my seat leads, okay? Imagine trying to trade right now. You have $100,000 you need to get to break even. Sounds awful, right? So I needed to get to $100,000 just to break even. That is an unbelievably terrible experience to feel. If you have a couple weeks where you break even, you're down money, okay? Because my seat lease was $8,000. All you need now, internet connection, that's pretty much it. You can get most of your charting for free. You can get charting for free. All you need is an internet connection. I mean, you can rent an office if you want. Most people can trade from home, okay? And you can get in. Penny-wide markets, weekly options. This is the best time in history to trade as a retail trader. So I'm going to teach you guys the market maker secrets. These are the market makers do not want you to know, okay? We now know how the market maker makes money. They make money on implied volatility, the bid-ask spread, and in time decay. The market maker actually wants you to make money. And you say, no, they don't. They run my stops, okay? The market makers are not out there to get you, okay? They want you to make money. Because if they make money off you, they will come back and you'll come back as another customer, okay? They need customer business. If there's no customers, then the market maker can't exist. Think of the currency exchange. If no one started flying anymore, the currency exchange at the airport would be dry, okay? They need your customer business. So the market maker actually wants you to make money. And we're going to look at an example here at Apple, how both you and the market maker can make money. Do market makers make a delta neutral hedge adjustments? As a market maker, it just depends on who you are as a market maker. I didn't trade delta neutral. A lot of the more conservative guys were more delta neutral focused. I would take deltas with my position, trying to read the institutional order flow. So let's say I am the market maker. I am a market maker who sells 20 of the Apple DS550 calls toward 25.30. So you buy them from me, and I sell them to you. Okay. So you come in and you go, I want to buy these Apple DS550 calls. I think the stock's going to go higher. So you buy them from me for 25.30. I sell them to you for 25.30. Okay. As a market maker, I will hedge my position. So if I sell 20 of these calls and the delta is 50, I will buy stock against my position. If I sell calls, that's a short position. I will buy stock against my position. Okay. If you don't understand how hedging works as a market maker, it's not that important. Just know that the market maker doesn't sit there and is short naked calls. They have a hedge and it's in a stock position. So they sell you the calls for 25.30 and they buy 1,000 shares of stock. Let's say 1 month goes by and the stock has rallied to $5 to $535. The December 550 calls are now trading $27. And you say, ha, 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 I got you, market maker, because I bought them for you for $25.30, and I'm going to sell them to you now for 27 bucks. 20 lot, you make $1.70 times 100, because every option is 100 shares of stock, nets in a profit of $3,400. So you say to yourself, you lost money, and I made money. I'm making money off the market maker. Well, this isn't exactly accurate. And I'm going to tell you guys why this is not accurate and how the market maker actually make money on this trade. You say, how can the market maker make money if they sold calls and bought them back at a higher price? And it is with their hedge. So remember, the market maker sold 20 of the calls for $25.30. But then they went out, and to stay, quote unquote, delta neutral, they bought 1,000 shares of stock at $530. The stock has moved up to $535, and the calls are now $27. The market maker lost $1.70 per contract, or $3,400. So the market maker sold you those calls for $25.30 and bought them back for $27. They lost $3,400 on the options. However, the thing we need to examine is the market maker, as a proper hedge, bought 1,000 shares of stock. The stock went from $5.30 to $5.35. So the market maker made $5,000 minus the $3,400 they lost. So they were net profitable of $1,600. Okay? You as a trader made $1,700. Market maker made $1,600. Wham, bam, you guys both made money. Trade's over. Okay? So this just proves to you that the market maker wants you to make money. Because if you just made $3,400 in Apple, is there a better chance you're going to trade more or less? More, right? So the market maker needs customer business. They need retail traders to trade with them. Otherwise, they can't exist and be solvent. Just like the currency exchange, just like the insurance company, just like the jersey store. Okay? So on this trade, the market maker he actually made more money than you. He actually made less than you. Sorry, he made $1,600. You made $1,700. Okay? So the one thing, if you guys can get out of this, is don't think the market maker is out to get you. Okay? They are not out to get you. They want you to make money. They make money in other ways. They make money on time decay, implied volatility, and the bid-ask spread. But they want you to make money because then you'll come back. So I will teach you the ways to take money from a market maker like me. Simple and easy. and I'm going to share with you guys one of those secrets today, and the other 6 I'm going to share with you on the workshop. If you guys trade equity options at all, from a 1 lot to 2,000 options a day, the secrets that I'm going to share with you at the workshop will save you hundreds, if not thousands of dollars in commissions and also in trading, okay? This is me. That's me on the right, actually. I'm not the old guy with the glasses. So this is me on the trading floor. This is actually the only picture I could find for me on the trading floor. I think you're actually not allowed to take pictures on the trading floor. And this is at the CBOE. As we can see here, CNBC's on in the back. And all these screens were option markets. This was actually his computer. This is called Micro Hedge. It's about $1,800 a month. This is called Ready Plus. So we'd be trading on these all day long. The brokers would be walking through the pits. You can see other pits back here, other pits back here. Trading floor is one of the coolest things. If you guys have never had a chance to see it, it's one of the coolest things out there. Market makers in the equity pits is dead. I started with 18 guys. You know, top tick was 18 people in my pit. There's now 2 people in the Apple pit. There's 1 person in the Google pit. So market makers really don't exist anymore. You know, as everything's gone electronic. But this is me as a market maker. I was down there for over a decade. So I will teach you the ways to take money from the market maker. And I'm going to give you one of the ways today. Okay, I'm going to give you one of the ways for free, and you guys will never see this anywhere else. And I call this one free advertising. Okay, you're driving down the highway, you see a billboard up, right? And the billboard says whatever it says. Get your teeth whitened, or go tanning, or something like that. Do you think that advertising is free? And the answer is absolutely not. That advertising is not free. Nowhere in this world advertising is free. Facebook ads, Google ads, Twitter ads, none of this is free. However, you can advertise for free on the exchanges, okay? Retail traders get something called quote-unquote customer priority. What does that mean? That means that if the customer, as long as the order is being represented, okay, which means you have your bid and you have your offer. If you guys put an offer out there and the market maker has the same price point, you will automatically get filled before the market maker. And you're like, how does that make sense? It doesn't, okay? Imagine going to a currency exchange. A currency exchange is set up. They're paying overhead. They're paying for computers. They're paying for staff. And you're standing right in front of the currency exchange saying, I have the same price as the currency exchange. I want to trade first. It's never going to happen, right? However, the exchanges have made it a way for you to try to encourage trading, and they call this customer priority, okay? I actually had to testify in front of 3 lawyers on microphone recorded one time because they thought that I traded before a customer, which I didn't, but we all knew that customers have priorities above the market maker, even though the market maker is paying $8,000 a month. So let's talk about this here. There's the market on XYZ calls. They are $1 to $1.30. 500 up. Let's say I bought these for 80 cents. And I know as a trader, if I bought these for 80 cents, okay, I would sell some at $1.30, okay? If I'm willing to sell some of my position, let's say I bought 20 of them for 80 cents, and I would sell 10 of them for $1.30. If I'm willing to sell them for $1.30, why wouldn't I put my offer in there? And I tell my subscribers this all the time, guys, this is free advertising. This is like the greatest thing ever, okay? So if I offer the calls at $1.30, I will get filled for the market maker. Okay, so let's say the calls are $1 to $1.30, 500 up. I offer 10 of my calls at $1.30. Okay, so now the offer size will be 510. We call this free advertising, since we know we'll get filled before the market maker. Okay, if I look at my positions right here, then you can see the bid-ask spread. Okay, so every single day I'll put offers out. So let's say go-go puts. I was offering some of these at 270. Okay, we try to find a little bit of wider market. SFXE is a perfect example. These are $1.20 to $1.40. I know I bought these for $1, so I would sell some at $1.40. So every morning I'll go in here and I'll offer some out at $1.40. Knowing if they trade $1.40, I automatically get filled before the market maker. It's simple, it's easy, and it's fantastic, guys. So the exchanges have rules in place to entice retail traders to put in more trades, okay? I do not put my orders in good to cancel, okay? I do not put good to cancel orders in. I trade every single day for a living, so I want to see where the stock moves before I make a trade, okay? So I'm not saying leave these good till cancels and you can, eventually will get filled. I'm saying I watch the market every day, but I will make markets, okay? I take markets, but I also make markets. There's something called FIFO. If you guys are in the accounting world, you know it means first in, first out. So if the market is $1 to $1.30 and the market maker is 500, okay, then, you'll get filled first. So the market maker wants you to make money. Just remember that. They always want to make money because they can make money in other ways. So we have a special topic course, how to take money from a market maker. I've showed you the ways the market maker makes money. Let's flip the script from them and let's start taking money from them, okay? You will learn the secrets to stop overpaying for brokerage fees. I get emails every single day, people asking me if their commission structure is right. I will tell you, because I'm non-biased and I don't have any partnerships, how to get the best commissions on brokerages, period. I will teach you the spread book. If you guys trade options or spread at all, you should trade the spread book. I will teach you the ways to save yourself money. How to gamma scalp and lock in profits on option positions before the market is open. Stock trades from about 5:30 a.m. to 7 p.m. Options are only open from 8:30 to 3. So if I have a position where the stock gaps up or down, I'll teach you how to trade the stock to guarantee and lock in those profits. When to exercise calls to lock in the dividend money, okay? To lock in dividend money. So many people leave money on the table because they do not exercise calls. Remember, if you are long calls, you do not get the dividend. If you are long stock, you get the dividend, okay? So this will teach you how to lock in the dividend money and why the bid offer size is so important, okay? So we have this workshop. It's only $97. Let me remove this thing. I don't know if they're there today. So $97 for this workshop. 3 things to know about this workshop, okay? Number 1, we will sell out of this workshop at $97. We want to thank you for taking time out of your day. We have it on my website. It's $199. So we will sell out at this price point, okay? This price point is only guaranteed to you guys for taking this workshop. Number 2, 100% money back guarantee. If you're not happy with the course, then I'll give you your money back. Simple and easy. We did an Ichimoku course for 800 people. I gave 3 refunds. We did Ichimoku for 800 people. I gave 3 refunds. So 100% money back guarantee. If you trade options at all, 1 option a day to 100 options a day to 1,000 options a day, this course will save you hundreds, if not thousands of dollars, okay? About half of my subscriber base I know are taking this course because this will save hundreds, if not thousands of dollars. You will also get an 8-hour recording. You'll get today's workshop recorded. You will get the workshop. It's going to be March 27th at 7 p.m. And you don't have to attend, okay? Only about 40% of the people actually attend. So March 27th will be the workshop, and it's 100% money back guarantee. So if you guys go and you're not happy with it, it's 100% money back guarantee. And if you guys have any questions about anything, we got a couple minutes left here. But if you trade options, are you interested in trading options? There is no reason for you not to pay for this workshop. All you have to do is click the link here. All you have to do is click the link here and sign up. If anybody has any questions, please let me know. If not, the next presenter will be starting in a couple minutes.